of Florida.
Well, all right, you guys. Exciting.
Lee of Nevada.
The sun just came out.
Jeffries. Lee of Pennsylvania. Jeffries.
In the background is the vote. I don't know, I don't particularly know who I'm for or not, but I love the fact that there's seems to be some democracy going on. There's actually voting. So let's see if I can give you an update. The purpose of this, there was fantastic news announced today for Logic, and there's tremendous news announced, I guess it was yesterday, for GOLQ. So I just want to, let me turn that down a little bit. Okay, so Donald's is up to 11 votes, so I guess they're going to have to vote again unless Democrats cross the aisle. Okay, I just want to quickly go through several things. Logic announced an alignment with MediaGel in the middle of December, and we discussed that before, but this is important as it relates to today's announcement. Designed to create mutually beneficial opportunities. If you come down to, here's MediaGel, but if you come down to what Jake Litke said, we believe that this is a terrific technological win and exceptional opportunity to rapidly create strong value for both companies, customers, and shareholders. By strengthening our mutual technology and services offerings by an order of magnitude. Okay. I want to show you this chart of Logic. Oh, that's what you get when you use free sites. All right, so we had a spike upward, which is partially explained by more importantly, what's explained is the recent sell-off by what is about to be announced. Oh, Lord. All right. The sun moves so quickly. There, I guess that's somewhat better. But if you can see a couple things on this chart, it spiked almost exactly to where it did before, which I think it sets up a really interesting opportunity for a third test. I mean, it might take 4 before you could get a breakout. But I'll explain to you what I think happened there. Let's just look. I don't think they have it, but just in case they've changed it. They never used to put GOLQ up as a chart. Yeah, you can't get it. Okay. Well, I want to come back to the tweets. Well, let's see. We can go through them now. We can go through them now. Let's just go through this one with small cap investing, and I'll try to highlight. I was going to go through my own litany and then come back to this as a summary. So we'll do the summary first. There's 2 mergers on the tape that have been announced for Logic, and the record date will be coming up soon. Combined, they're valued at $3 a share. The stock is around, I forgot now. Let me look quickly. Around 52, 53 cents a share. So remember that. There's a new partner, MediaGel, which I just showed you the announcement for. And they've pre-released their 4th quarter in terms of an announcement. It's not really a pre-release, but a kind of a guidance. They announced that 4th quarter results are going to surprise to the upside. The 2023 revenue forecast is $100 million for the combined companies. There's definitely insider biting. And here's the thing, GoLogic shares, this is what I was going to try to show you anyway. GoLogic shares are trading at around $3, and Logic has 4.5 million of those. So if you take 4.5 million and multiply it times 3, you get $13.5 million in value. You divide it by 50 million shares, I'm just using an approximate number, that's 27 cents a share to Logic, just based on their ownership of GoLogic. And we're going to see, I think, if I remember what I saved to show you, why GoLogic is going to be an exceptional story as well. So out of the 50, let's call it 52 cents, there's 27 cents, which is attributable to the value of GoLogic itself. So I'm just gonna, that's 25 cents left in the price of the stock for the two mergers, the $3 valuation, and you see this entry here, the new revenue customer. I'm not going to show you that again, but they announced that they had signed a new customer generating. Okay, Donald's has 14 votes, so I guess they're going to have to do it again. Anyway, generating something like 3 or 4 million a month, or 40 million for the year. So there's a lot of action going on. Let's see what Chris says. Okay, this is the announcement today I want to go through. They appoint Ogilvy, and they change the board of directors, which I discussed yesterday with you, or 2 days ago. And so they're in the preparation for an uplist and the merger. And then they're going to have the record date, obviously. Okay, let's go. I showed you the stock chart, I think, of Logic. I went through Edgar to get this information. The group that, okay, Donald's is up to 16 votes, so it doesn't look good for something happening on this particular vote. Okay, so the purchase agreement on March 30 was between Logic and Ionic Ventures. Now, you can go through it. It just goes on and on and on and on. And I learned enough by looking that their original, let's call it tranche of shares they got was a little bit under $1 a share. But then they had the option that if the stock price went down, they would be given additional shares as payment for the loss in value of their original shares. So they get another slug of shares. Well, this materialized, this loss in value materialized. And you can see it here. If you see where the stock is right now, oh, that's GTII, sorry. I know I put in the, well, I should say I thought I did. Okay. if you see where the stock is trading now at 53 cents, and I'm going to try to explain that to you, I reemphasize the stock is telling you where it wants to go, which is up. But if you go back to March, which you just saw the document, the stock was trading at about $1.20. And so they priced this deal under $1. So all that Ionic did was short stock in the open market versus this contract. So I don't know if that's technically illegal or not. I'm sure it involves a little bit of eliding of the rules, but they're covered basically. So they're in, like a lot of these so-called investment banks, they're just giving Logic's own money because the SEC and FINRA and the major banks have it set up so that Logic has no access to Logic's own publicly traded market as a source of capital. So they have to go through these intermediaries who drive the price down, but they clearly sold stock prior to the document being signed. Then they got stock at a discount, so they already locked in a profit. And then because of the fact that they could get, Ionic would get an extra slug of shares if their investment didn't stay at $1 or better, they get rewarded for taking the risk in the stock. Well, guess what Ionic does? They short the stock downward. And Ionic causes the clause that was meant as given in goodwill by Logic, meant as a way of protecting their downside. They slaughter their client, just like the rest of them. And so there's shorting, manipulation, fraud, goes all the way down. Stock comes down into September. Well, what's interesting, I don't know exactly why they took the foot off the brakes. My guess is they either ran out of shares to sell, or it's the timing when they got their extra slug of shares allocated to them. It popped up and they started selling. Because remember, they don't care. Ionic doesn't care about Logic. All Ionic cares about is the manipulated spread, the arbitrage between a poorly functioning market for shares and what they can manipulate out of that based on a contract which Logic had to sign to raise capital. Well, the good news here, there is good news. Apparently, Logic is not a strict naked short seller. They do have, among criminals, they have a modicum of gentlemanliness and ladiness. So they're down to about 1.8 million shares to sell from that new slug, so they can book a profit because they are geniuses in managing money. Absolute geniuses in managing money. They can see an opportunity in a stock and they're able to extract value for their investors and for themselves because of their geniusness. It's all because they have the ability to sell under the regulation show exemption shares that don't exist, pretend they're going to deliver. And then in this case, they have a document that there are shares that they can deliver. And it is likely that they're going to stop selling after they get through the next 1.5 million sort of range shares to sell. So anyway, the news you're about to see was pending, and it caused Ionic, for some reason, following one rule when they don't follow others, I don't believe, in my judgment. I haven't heard that from anybody else. But there all these opportunistic, toxic lenders are the same. Look what they did to the stock price. In a growing company, growing revenue. And by the way, I've gone to look for they don't have a website that I can find. The principal is one of these investment bankers. I think his company was Iron Bridge Capital or something like that, Ventures. Anyway, when that overhang goes, the stock is telling you where it wants to run, above the 80-cent range. And if you, I've shown you this before. But if you really look at it, once it goes through 80 again, up in this $2, $3 range is where it's headed, possibly as high as 4, just on a technical chart. Anyway, so I'm telling you both. I guess I'm telling you three things. I'm explaining why, and I'm about to show you why the stock is sold off. It's because Ionic is back in there punishing their own client for their own greedy arbitrage between what price they got in the slug issuance down at 25 cents, and anything they can get above it adds to their returns, the bonuses they can keep, and then they can impress their own investors, go out to new corporate clients and say, hey, we raised this money, so then go rape those same clients all over again. They're not doing anything different than the rest of the street, and it's allowed because the big banks like Goldman, Citadel, they benefit from this kind of fraud. But anyway, in this case, so one, it describes why it was down. Two, the overhang is going to disappear. And I think you're going to see the stock snap up nicely. And three, technically, this stock still looks strong to break out of 80 cents on its next run, whenever that run happens, and go into the $2, $3 range. So this is the agreement, Ionic Ventures, March 30, Logic. Here I tried to get their website. This is a list of their top holdings. Logic is their second highest, but to my information and belief, the number of shares they currently hold are down sort of in the 1.5 million, 1.8 million range, because they're just getting rid of it. All Ionic's interested is arbitraging an illiquid market. If they have to break a few rules, as long as it's a nod and a wink, they have a contract, they have a legal signature. They're not, they wear white collars. They're not going to go to prison or anything, and they can just keep sucking that arbitrage, that extra money out of the company, which means that Logic has had to be tough, lean, and fighting hard. But guess what? They're on the verge of really good things happening. Okay, here's the news today. Logic appoints former Ogilvy and WPP executive as COO and makes board changes. I've already told you about the board change. But here is this guy, Christopher Andrews, is going to be appointed COO. Christopher Andrews brings 20 years of business leadership, whatever that means, proven talent for unlocking revenue opportunities. I say that because I'm not judging him badly, but leadership is it's a little bit in the eyes of the beholder. But I think you're going to see by his record here, this is a great addition to the company. He's got a track record of helping private and public companies build their IT operations, integrating technologies, people, and data for growth and long-term success. He brings to Logic an extensive record of achievement, including 150 million plus in revenue streams, which he's created. He will initially be responsible for leading the company's data logic operations. That's the portion, and there'll be a record date soon, that is going to be momentarily absorbed by the Aubrey SPAC, and then the SPAC is de-SPACed, and it becomes DataLogic as a listed company. It's a planned spinoff to be NASDAQ traded, they hope. Okay, this is just exceptional skills. All right, I'm excited to join the amazing Logic team. This is, again, compared to, remember, the previous addition to the board, and I'm having a Biden moment. Anyway, she was also extremely excited to join. I see DataLogic enjoying a unique opportunity to become a leader in performance marketing by enabling verticalization into compliance markets such as, well, anyway, for CBD. Okay, here's what I want to get you to. Andrews most recently served as CDO and COO of MediaGel. Remember, Logic just announced an alliance with MediaGel? Doesn't it seem like that would be a logical acquisition? MediaGel, digital marketing, building brands, driving sales. Isn't that exciting? All right, now let's read this. Oh, this is, okay, so let me just finish on Logic. Logic has brought two new powerful people on board. They have two mergers, or it's mergers and then a stock split. Each of those mergers are just beginning. In the case of DataLogic, here is MediaGel, probably will be next. I mean, I'm just looking at 1 + 2 and seeing that +3 is next, is adding MediaGel. And then the other spinoff is into an asset. Right now I'm forgetting the size of that asset because I'm confusing it with GOLQ. But anyway, just excuse me for forgetting the size of the asset they're going to be buying. I could look it up. But the point is, they're going to be buying additional as well. So both new companies are going to be growing. And so you're going to start out with a $3 valuation estimated. And remember, already in Logic is 27 cents for their ownership of GOLQ. So you're basically you're paying 52 cents right now, but you're basically risking 25 cents to get $3 of value. That'll be two different entities and then growing. All right, now I want to tell you about Logic. GOLQ. This was a very interesting article. Came out yesterday, January 4th. Emerging Markets Report, bigger and better. And I'll try to read. I'll just read it because it's an exciting article. GOLQ, a provider of mobile fintech solutions for digital transformation and consumer data analytics in Southeast Asia, announced its plans to join forces with Gamma Ray, a privately held fintech ecosystem for the new world digital economy in a merger valued at $320 million. And that reminds me, the other number for the merger that I forgot was around $240 million. Now that I see this number, I can separate the two numbers in my head. So in a merger valued at $320 million, but remember, it's valued at $3 a share. So what does it mean for the two companies? We will make it simple, bigger and better. And they're already looking for their next acquisitions. Technological development has made the trend of fintech company collaboration and partnerships more popular. In 2021, which was a huge year for fintech mergers and acquisitions, there were deals totaling $348 billion. Now for 2022, this year could be bigger. Fintech companies merge for many reasons, with the ultimate goal of scaling and growing into a bigger and a more resilient company, obviously. Increased funding in the fintech marketplace has made it possible for many companies to join forces and combine skills. Fintech mergers and acquisitions are cost effective as compared to building it from scratch. So specifically, the plans for GOLQ and Gamma Ray, the focus is going to be on the high growth market of wealth management for Generation Z and millennials, followed by a launch of a new digital payment platform. And that excites me. I'm not as well versed as many of you, but apparently Elon Musk, one of the reasons he bought Twitter was to go back to his www.X.com, is it X? Anyway, a payment system that he was partly designing into the PayPal way back. So this payment system is exciting. So Timothy Albert said, opportunities for growth and wealth management. It is time to address the market on a larger scale. Every article you ever read, they they go to business school to learn one word, synergy. Anyway, larger scale through this highly beneficial merger. Better access to capital, liquidity, brand visibility. And then Matthew Brent also spoke about it. So in conclusion, this is written by Benzinga. The merger between GOLQ and Gamma Ray is a huge one for both companies. It creates a potentially bigger, better, and brighter future in the fintech industry for the combined entity. Profitable business, strong cash flow, $800 million in customer financial assets, full stack ecosystem, and okay. So I want to I don't know how long I've been talking, but I want to get this news today on appointing Christopher Andrews is huge. It follows on the appointment of the wonderful candidate last. Sorry, the vote came out. I guess it's all finished. Donald's got 19 instead of 20. Others got 1, and Present got 1. So I don't know what they're going to do. I guess try for a 9th vote. So anyway, the board is building. The news is exceptional. And the company Logic is preparing for a NASDAQ listing. There's big changes coming in management, as you just saw. A record date is going to be assigned soon. I just don't know when. I think they're waiting on the S4. But as soon as that record date comes, that's your last chance to get, by buying a 50-cent stock, it might be 80 cents by the time you buy it, which, remember, has 27 cents of growing value in it. So you're paying 52 cents. It has 27 cents representing the shares that it owns of GOLQ. So you're basically paying 25 cents to be part of 2 different companies. One is right, at least starting out of the gate, they're buying a private wealth management. But then the Aubrey SPAC, which is going to be Data Logic, they have that revenue company that they announced November, 40 million next year. Basically, you're going to have $3 or so in valuation once the split happens, and that's going to be soon. A record date is going to be soon. Well, one guy anticipates if the stock goes much above 90 cents that there could be huge short buying. We'll see how that goes. I would guess that for a short squeeze to occur, it would have to stay above that number for a while. But you've got the news coming that could make that happen and make the stocks easily stay higher than that. So, and then of course, the idea of having a split might cause some troubles to the short. But anyway, so I just want to leave it there. I said I'd try to keep it short. This is tremendous news on Logic, tremendous news 2 days ago on GOLQ. Really talented people joining. They're excited to be joining. Tremendous deal flow coming. And you have a chance to buy a stock in Logic that's 52 cents right now at $3. And let me check where it's trading just to make sure that I'm not exaggerating too much. GOLQ is actually trading at, okay, it's at 220. So you have to lower my number then. Let's say it's 20 cents a share in value. But still, you get the concept. Both stocks are undervalued. Both stocks are really attractive to purchase. Good news so far, more news pending, record date pending in the case of LGIQ, and I expect more good news in both cases. So I'll leave it there. Thank you for listening. Cheers.